gold is holding up partially. We still have we have China buying massive amounts of gold. They revealed that recently, that they're still buying. A lot of other central banks. So the demand for gold is out there, and also the safe haven aspect. So even though the stock market's close to its all-time highs, money is still flowing into gold. Now imagine if the stock market starts to cascade lower and we get into a recession, gold could really head higher. And I'm in the camp that by end of year, we're over $3,000 an ounce on gold, which isn't that far away. In all fairness, it's only about 10% away or so, a little over 10%.
In 2000, the price of gold was at its lowest since 1990, with a troy ounce of gold costing $274.5. Since then, gold prices have been rising, and after the economic crisis of 2008, the price of gold rose at higher rates than ever before as the market began to see gold as an increasingly good investment. Renowned analyst Gareth Soloway emphasizes gold's resilience near all-time highs, despite a strong US dollar index, defying traditional patterns. Gold prices usually see pressure when Treasury yields rise and the dollar gains ground. A stronger dollar can be a negative for commodities priced in the unit, making them more expensive to users of other currencies. Higher Treasury yields, meanwhile, raise the opportunity cost of holding assets that don't pay interest. However, gold prices settled Thursday at their highest level in 4 weeks, defying their usual inverse relationship with strength in the US dollar and gains in Treasury yields. Fiscal worries are prompting investors to seek out safe haven assets. Concurrently, Soloway attributes this strength to global uncertainty, safe haven demand, and central bank purchases, particularly by China, while he predicts gold could surpass $3,000 per ounce by late 2025, citing an upward trend. Regarding silver, Soloway states its dual role as a safe haven asset and an industrial metal. He notes that silver's performance depends heavily on economic activity, particularly in the US and China. China's impressive industrial production data boosted silver prices. Market bets on a more accommodative stance from the Federal Reserve, driven by signs of easing US inflation, further supported the metal's performance. In China, the silver economy is expected to grow to 30 trillion yuan by 2035, accounting for 10% of the country's GDP, up from 7 trillion yuan, $974 billion, in 2024. The strong showing from silver prices has sparked renewed investor interest in the potential opportunities in both the physical metal and silver mining equities going forward. Recent developments in the silver futures market and intensifying global competition to secure physical supplies further underscore the increasingly bullish outlook. Now we present the clips of Gareth Soloway's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think this is so impressive for gold, right? Because if you're the old school gold investor, for the last 5-10 years, it was like, okay, when the dollar goes down, gold goes up. And gold, it's not at its all-time highs, but it is so close to its all-time highs, and that's impressive to say the least. I think that's because as rates have gone higher and the dollar has gone higher, they're going higher because of the nervousness over the rest of the globe, and there's almost like this safety trade, right? So I think gold is holding up partially. We still have we have China buying massive amounts of gold. They revealed that recently, that they're still buying. A lot of other central banks. So the demand for gold is out there, and also the safe haven aspect. So even though the stock market's close to its all-time highs, money is still flowing into gold. Now imagine if the stock market starts to cascade lower and we get into a recession, gold could really head higher. And I'm in the camp that by end of year, we're over $3,000 an ounce on gold, which isn't that far away. In all fairness, it's only about 10% away or so, a little over 10%. Chart wise, look at this beautiful wedge pattern. So look at how gold just has hovered and held this line over and over again. And now, are we getting a breakout here? Like, think about this. If the dollar actually gets a pullback off of this level, that could be the next catalyst for us to move up on gold back to the all-time highs up here. And I think that's very, very possible here. We're borderline breaking out. We haven't broken yet. I have to see confirmation on this chart. But if it does happen, gold's in good shape. So basically, it's just continuing the upward momentum. So let me erase these lines here, and we'll just look at kind of the upward sloping parallel here. If we have this parallel here, and then we have a secondary parallel right underneath these lines as well. So they're both usable here. But essentially, if we take this and we just map it out to these highs here, okay, so let's just use this alone as a bigger parallel. And then we go up here, you can see that by later this year, if we extend this out, this is in March at this point. Even in March, we're basically above 3,000. So the idea is we're in an uptrend, And this line will work as resistance, but the beauty of it is it will be above 3,000 by mid-year. You got to figure that by end of year, in the very least, we're above 3,000. So there's no doubt that silver's been a little bit more of a struggle. I think the key to silver is understanding that 50% is a store of safety, which is like gold. 50% is an industrial metal that's used more and more, right? So the key here is, and silver right now is trying to close above a key trend line. So that's a positive. But again, if you're a silver investor, and one of the reasons why I'm a big fan of diversifying with gold and with other assets is that if we were to slip in a recession, right now, the U.S. has not given us any doubts that the economy is still strong. But let's just say all of a sudden we start to get signals. Then that industrial side, investors will have to recalibrate how much demand will come from that for silver. So as long as we have a strong U.S. economy, especially if China starts to get out of their funk, then silver can really go higher. But again, just as an investor, you want to be very tuned in with silver to how the economic activity is going on.
Gareth Soloway analyzes the performance of major banks like J.P. Morgan, Citigroup, and Wells Fargo, noting their current strength driven by a robust U.S. economy and higher interest rates. While he acknowledges some upside potential in bank stocks, he expressed caution, predicting a pullback if economic conditions weaken. J.P. Morgan's net income soared 50% to more than $14 billion in the fourth quarter as the bank's profit and revenue easily beat Wall Street forecasts. And other major banks reported banner earnings for the year as businesses and consumers continued to spend despite elevated interest rates. As great as 2024 was for markets, bank stocks did even better despite the Federal Reserve trimming its benchmark interest rate 3 times between September and December. Looking ahead, Soloway warns that while retail investors are drawn to strong current earnings in the banking sector, the real challenge lies in forward-looking risks. He highlights that potential mortgage defaults in a recession could strain banks within the next 3 to 6 months. Let's get back to the interview.
The banks are doing really well today. Citigroup, BlackRock, Goldman, JP Morgan, like you mentioned, Wells Fargo, they all reported, and they're all pretty much up today on the day. JP Morgan I have up here in front of us. And these charts, what we can see is that there's a classic resistance up here, but it's still got room to go. It's not a lot of upside. You're talking about 2-3% more to about 261. But the way I look at it is if you hit it here and pulled back, and you hit it here and pulled back each time, then as a technician, I'm going to look for a reversal if JP Morgan gets to about 261 on the chart. Likewise, on the downside, this would be technical support down here. So we haven't gotten there. I think there's still probably a little bit more upside, but same thing on Citigroup. If we take a look at this chart, we're getting very close to major pivot highs going back to 2021 on Citigroup and 2020. And so I still think there's a little bit more upside in the financials, but I don't think there's a ton. Like for me, I'm not buying the financials today. If anything, I'm patiently waiting for a shortable opportunity for them to come back, when they hit these key technical levels. So right now, again, a little upside there. What I do like? There are key biotech stocks that look interesting to me. One of them I'll point out to you guys here. Yeah. If we bring up the chart, you can see here, this one is Biogen. And Biogen, they're trading at about a forward PE of 9. So it's a low PE. And this is where I'm focusing more of my interest on the long side. I'm looking for value names. Because everything else, like these tech companies, they've gotten to valuations of like 30 to 40 PE ratios. Historically, that's crazy. But what I like about this is these guys have an Alzheimer's drug that's in the pipeline. And if it can, so that could be the new frontier, right? We've seen the weight loss drugs, the companies like the Eli Lilly's go parabolic. But if you get something positive out of this Alzheimer's drug, this could be a double or triple in the future, like an Eli Lilly. And it is just hitting support right here going back to 2012. There's a pivot low. Now, listen, could it go lower? Sure, it could. I mean, anything can happen. But these are the ones that have the value, the low PE ratios, the consistent growth. People are going to need drugs if we're in a recession or we're not in a recession. That's where I'm starting to look for a value in the stock market. So I think the key is exactly what you're saying, is that the economy is strong. So interest rates are staying higher. So remember, these are banks that lend money. So they're getting these interest payments coming in. And we're also seeing the economy strong. So a lot of the bad debt is being kind of hidden, if you will, to the point where these banks, if the economy weakens, way more people are going to start defaulting on mortgage payments, on debt payments. But we're still in that sweet spot in the US economy where that's not happening massively yet. And I think investors are very short-sighted, right? So once that starts to happen, so while you and I'm the type that I always look forward, right? So I'm like, okay, in 3 to 6 months, if we're in a recession, you don't want to be long banks, so I'm not going to go long banks right now. But the retail investor is looking at their earnings today and saying, wow, these guys are crushing it. Let's all jump into the banks. And I think that's the key.
Bullion Vault's latest survey, polling nearly 1,450 responses, now forecasts a gold price of $3,070 per troy ounce at the end of 2025, an increase of 16.2% from today's level. The survey finds even greater confidence in silver, forecasting an end 2025 price of $36.90 with a projected increase of 21.7% from today. What are your thoughts on Gareth Soloway's analysis of gold and silver's potential? And do you agree with his cautious stance on the banking sector's long-term outlook? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.